Hello bro, and welcome back to the new stock evaluation video. Today we are going to analyze CarMax Incorporated with the stock ticker KMX because last year they published an earnings report, so let's take a look at it together whether we should also add CarMax Incorporated to our own stock portfolios. Now, as always, we are going to analyze CarMax using this little Canva presentation that I prepared right now here. So let's begin, okay? First of all, why should you listen to me? This is very simple answer, bro. My name is Yasha and I am your best investment advisor who will help you make smart decisions in terms of investments, okay? Now, this is me right now here. And additionally, I also know quite a few secret strategies that will help you outperform the SP 500. So if you are interested on that, click the first link in the description, okay? Now let's begin. So this is going to be very simple, straightforward and beginner-friendly analysis without any bullshit whatsoever, because I really don't want to be like your useless business professor on your useless business university, because they are just talking shit, they are still fucking broke, so why should we listen to them, okay? Now, as a complete beginner, you should generally care about the following 6 things: chart, profit, debt, money on the bank account, value and price. Now let's begin with the chart. So for chart, we have here a little instruction that tells us chart has to grow for all 10 years. Now what exactly does that mean? That means that we will here first of all draw a little exponential line, kind of like this, and then we will compare the actual chart with this line. So first of all, you can see that the chart was following this line, it was growing massively. But then in 2022, suddenly what happened fell. The stock fell completely. So we don't know exactly what happened. Probably some issues, probably some fucking coronavirus, whatever the fuck it was. But the point is that the chart from now 2022 to 2024 is completely terrible, okay? Generally, we want to see a chart that grows kinda like this, you know, up and down, up and down, up and down, but generally up. So we don't see that here, so that's a bad sign, okay? Now we come to the profit, and for profit we also have an instruction that tells us it has to be in plus and it has to grow as well. Now here is the same procedure as with the chart. First of all, we will draw a little exponential line, kinda like this, and then we will compare the profit with that line. So generally the profit should also grow through all the years, okay? And what do we have here? Here you can see that the profit actually followed the chart line because first of all, the profit was going up, you know, it was increasing. And then in 2022, it suddenly fell down. So of course, this tells us again that something inconsistent happened in 2022. So that's a bad sign as well, okay? So profit is also a no-go. Now we come to the debt. And for debt, the instruction tells us that it has to be low, plus it has to decrease through the years. Now here we have quite the opposite. Instead of debt going like this, kind of below, it actually grows, you know, as it goes like this, as you can see on the chart. So that's also a no-go. Now we come to the money, and the instruction is that this is actually money on the bank account, plus they have to have more money than they have costs. Now, how do we know if they have more money than costs? It's quite simple, bro. Take a look at the money on the bank account and they have minus $6 million at the moment. Now, what does that mean? That means that money is less than costs. So that's completely unsustainable, bro. They are having a loss right now. So that's a no-go for sure. Now we come to the value, and the value is actually means that the stock has to be undervalued. That's quite obvious, okay? Now, how do we know if the stock is undervalued? We measure 2 different things. We measure P/E ratio and we measure intrinsic, I don't know what's with my mouse, intrinsic value. Now, as a complete beginner, this might be a bit complicated, bro, but generally keep in mind that P/E has to be lower than 15. Now, P/E of CarMax is 28. So it's actually higher than 15. So that's not a good thing, okay? P/E is higher, that's not a good thing. Now we come to the intrinsic value, and intrinsic value has to be higher than the price. Now, intrinsic value for this stock is $99. Now, what does that mean? Based on some calculations in the background, this stock right now should have the price of $99. The stock of this price right now should be $99 in order to be a fair price. But the current price of CarMax is $71. That means that the current price is actually for around $20 to $30 below the fair price. So the current price is below the price that this stock should have right now. So that's a good sign actually, because if the intrinsic value is higher than the price, then the stock is undervalued based on those calculations. But still, bro, when we evaluate the stock, we want to be as harsh as possible. So right now we can see that P2E is higher than 15, but the intrinsic value is higher than the current price. So that would give us kind of in the middle between buy and sell. But since we are as harsh as possible, we would tell that the stock is overvalued, okay? And now we come to the price, and here we have a very simple rule. The price has to be lower than 150 euros, $150, 150 British pounds, whatever, bro, because we don't want to buy overpriced stocks, okay? Now the price is currently sitting at $71.63, so this is below $150. That's a good sign, okay? And now we come to the final evaluation, where we will actually just summarize whatever we found out about this stock and then decide whether we should buy or sell it, okay? Now, in terms of the chart is absolutely horrible since 2022. If you don't believe me, revert a few minutes back and you will see what I'm talking about, okay? So chart is a no-go. Profit is also a no-go. It was growing just like the chart, but then since 2022, it started to fall down massively. So we don't want to invest in stocks that have those huge swings, you know? Now, in terms of the debt is growing, so that's a no-go as well. They have, in terms of the money, they have more costs than money because they have currently minus $6 million. Yeah, minus $6 million. So, So that's a bad thing, bro. Of course, we will mark that as a no as well. Now, in terms of the value, P2E ratio is higher than 15, but intrinsic value is also higher than the current price. So it's actually between buy or sell, but we are harsh as possible, so value is also no. And the price is currently at around $70, so the price is below 150. So that's a good thing. Now, should you buy or sell, bro? I think that you should sell this stock. Don't even bother buying it because it's nothing special. You know, you could see the charts, they are horrible. Like they were growing massively and then they also started to fall as quick as they were growing. So that's a bad sign. They have minus money on the bank account. They have growing debt. They are, in terms of the P2E, overvalued, but in terms of the intrinsic value, undervalued. So the only good thing is actually intrinsic value and the price. And that's about it, bro. Like, I don't think that this stock is something special. It seems like some mediocre stock. I don't know, for me, I wouldn't buy it at all, bro. When I was doing the analysis, I was like thinking, yeah, what is this shit, you know? So, bro, if you want to know more about stock market investing, if you want to outperform the SP500 with investments, click again the first link in the description, bro. Do the hard work and see you on top of the world.